Well, good morning, everyone. I saw a couple of you join after. I kind of say good morning to everyone. We are coaching businesses for success. We're here every Thursday. So if you have questions or looking to grow your bookkeeping business, you can also find us on YouTube and in podcast form underneath the Bookkeeper Blueprint podcast. So both of the podcasts get up there. And then on YouTube, there's additional content that gets loaded there. So if you're looking, find us there and comment. We'll engage. Q&A happens at the end of this call every week. So if you have questions that will help you grow your bookkeeping business, questions about the course, like as you're going through the course, you can ask those here. If you're listening live on Facebook, feel free to join on the Zoom link so that you can jump in, ask questions and things like that. See the chat, all of those fun things. On this call, we want to give you like the behind the scenes. This is what Megan and I are doing to currently run our bookkeeping business. We share with you what's working, what's not. And I kind of believe if all you did was attend this call every week in conjunction with your bookkeeping education, you could very well achieve your goals. Again, if you have questions, jump on at the end. We'll invite you to turn your camera off if you want to and unmute and ask those questions. We do check the questions, like if you know that you're going to just be able to watch the replay, if you post your questions in the guide section, we watch those and we answer those at the end as well. There is no screen sharing on this call, but if you want to screen share and have someone help you click buttons and show you what to do or see what actually went wrong in QuickBooks, we do have the private coaching calls where Megan, a VIP coach, or I can jump in and walk you through whatever's going on. All of our coaches are actively running their own bookkeeping businesses and have for now several years themselves, if not longer. Okay. I wanted to share this win with you guys from this week. Diana has kind of started and stopped her bookkeeping business over the past couple of years. And she sent me, like a week before she sent me this, she sent me a message saying, hey, I've had enough. I'm ready to take this and get this done. And shortly after that, so this was within a week, maybe two max, where she sent me a message saying she landed a $6,700, so $6,750 in back work for a whole year and $750 monthly. And they're going to adjust it after they get initially set up because they're not currently using QuickBooks well. So there was a little unknown on the client part of what really the service entailed from their side, like how much they had. I know that conversation, we talked later and it took her 15 minutes. And she is a people person. She loves walking into people. So she actually met the client in person. She walked in. The client was like, where do I sign? And she's like, wait, do you want to know the price or what this includes, what this looks like? He humored her, let her talk. Within 15 minutes, they were done with the bookkeeping conversation and chatting about like local events. So that was cool. Wanted to share that with you because that happens all the time. So this isn't an anomaly. I think a $30,000 cleanup can be an anomaly. This is very normal. Megan, would you agree with that? Is this more normal?
Most definitely.
Yeah. So congrats, Diana, if you're listening to this. Good job. Okay, so upcoming events. If you want to make sure that you're catching our free webinars, trainings, these Thursday calls, go ahead and use this QR code to capture that calendar and add it to your event. So if you're using Google, Outlook, Apple calendars, etc., it will pop up a link for you to download the calendar, connect it to your calendar if you want to make sure that you're not missing these and other free events that we do. If you want to, actually, did everyone get a second? Let me know. Okay. Let me know if I need to come back to this and I'll make sure you get the calendar, guys. Okay. For me, it just helps to have on the calendar instead of just in a Facebook event. So there you go. Suze is saying, yeah, Diana. If you want to become an affiliate for the Bookkeeper Blueprint, I know we see every week some of you guys are adding friends to the Facebook group consistently. We love it. We love to interact with your friends. We love to help you see like grow like a tribe of bookkeepers. It's really fun. I know I have seen, like, my sister invited her daughter, who's invited her fiance and friends, and it's like this little tribe within themselves of bookkeepers becoming bookkeepers, because it is such a flexible avenue to take, and it is one of the most profitable avenues in that sense. So if you want to become an affiliate, let us know. Megan already, she's on top of it. I forgot to tell her again that I have this here, so she's on it. She already posted that link in the chat for you, so fill that out and we'll get you guys set up. Okay, Megan, did I miss anything before we jump in?
No, I think that was it.
Okay, so we noticed that as everyone's getting these cleanup jobs, that it can be really kind of vague on when to do the cleanup, like when to make QuickBooks right and when to start over in QuickBooks, like when to say you have messed up QuickBooks beyond repair. When should you start a new QuickBooks file? Sometimes you should start a new one. QuickBooks even says you should start one. And here's 3 instances where QuickBooks themselves say you should start a new QuickBooks file. One, your company changed from one entity type to another. So like you went from a sole prop to a partnership. You might want to start a new QuickBooks file. So the entity physically changed. And I run into that all the time where a business owner either brought in a partner or sold the business to a partnership. And so that partnership taking it over, even if the owner stays on, we should start like one entity closes, a new entity starts, we should separate the QBO files. I've done that before with a couple of years ago. I had a client, he merged with a partner and at the same time purchased a third entity. So now we were merging 3 entities into one, and we did definitely move all of those 3 entities over into a new QuickBooks file at the date of the new entity starting. You changed how you track inventory. So you started with LIFO, so last in, first out, or first in, last out, or 2 of the many inventory methods. So you changed the inventory method and you were tracking inventory inside of QuickBooks. You'll want to start, QuickBooks suggests starting a new QuickBooks file to change that method. The other reason that QuickBooks suggests it is you want to combine different company files into one. So that was the other example, like where we combined those 3 entities into one file. So that means you have like a sole prop and then you started another business, which is really similar. Talk to your CPA and the CPA is like, oh yeah, that's really one business. You don't need 2 entities. And you're like, great, I don't want 2 entities. Let's do one. That'd be merging the 2 in together. Potentially. Yes, ma'am.
Savannah on Facebook said, what about an S Corp back to an LLC?
That could be. So that I feel like, so prop to partnership is really cut and dry. So QuickBooks, like that was physically what QuickBooks said. With an S Corp, you then have retained earnings that you have to track. And a lot of LLCs, like if you have a client and you took them on for a cleanup job and you know that you had to plug $100,000 in AR to retained earnings or an equity account, like an accumulated adjustments account, that retained earnings does not have the same integrity of a new account. So you're in that instance, you're going to want to work with the CPA and or follow the tax return. So you're going to have the LLC Schedule C return. And then the first year that they file, an S corp return, you're going to have that return. And where did that retained earnings start? So like if you're jumping in, but if you're at the beginning of it, I might recommend talking to their CPA with how they're planning on doing the retained earnings reconciliation. That would be the number one reason I would start a new QuickBooks file. Do you have to from an LLC to an S corp? Potentially not, but if you know the integrity of that retained earnings balance is not there. So retained earnings is accumulation of all the net profit or loss and owner equity. That's what that amount is. So if you know that you've had to like clear stuff out and you've used retained earnings to do so, is it right? And in that case, a CPA might have you go back and like redo the books for those periods to make it correct. So like from 2021 to 2024, right? Because somewhere along those way, like that way you did a cleanup, you cleared it through retained earnings, and that needs to be undone and it needs to be done correctly. So that could be, I don't know.
So
go ahead.
What about an S corp? She said S corp to LLC back to an LLC. I did not know that was very common, but that's the second person this week that said they had a client switch from S corp to LLC.
So typically, if you elect S corp status and you revoke it, you become a C corp. So I would check the entity, or if they started a new entity. So once you go to S corp, there really isn't a going back, from my understanding, unless they did something like, how did they do that? So they could have said we filed it, like I would check the documentation in that instance. Sorry guys, I like can't see the chat now that I'm sharing my screen. I lost it. Does that help? Let me know. Oh, you might also be on Facebook. I don't know if I see that.
Yeah, that was on Facebook. But yeah, I don't see a response.
Okay. Yeah, I would check the entity status. And what will happen is if they do file an LLC and it gets rejected, you'll know that they're no longer an LLC. Like if they file a Schedule C. I would ask more questions with that, because that's not the reason it's not common is because it's like not a
thing.
you then get double taxation in the C corp. So most times what I have seen when an entity wants to go from S corp back to an LLC, they start a new entity. But I mean, I don't, because I primarily do bookkeeping now instead of taxes. If there's something that changed, I could always have missed something. But that was last I checked, because I had a client ask me. So that's the last time I checked. So okay. The other reason I have seen to start, let me know if there's anything else on that.
Oh, hold on. She said, okay, they just went from being a big business to going part-time with no employees. So they asked if they could do that.
Okay, consult a CPA or an attorney. An attorney can also, so CPAs are great when it comes to the financial number side. Attorneys are great when it comes to the legal side. So you kind of need both when you're doing funky things. In this case, either could be fine if the CPA specializes in entity setups. So I would recommend your client starts with because you can still have an S corp that, like, if there's no payroll to run out. So if there's no employees, that's okay, because you can have employees in an LLC. If they're not wanting to put themselves on payroll, there might be some workarounds to that. Like, so if they're not planning on taking distributions, then they don't have to run payroll. They can also run payroll at year end. They can also pay maybe a spouse if the spouse isn't on ownership documents. They can also pay their kids. So I would pause and have them ask some more questions until they fully understand the consequences and what would be in their best interest. The other reason, Megan, I think that you and I both see to start a new QuickBooks file is a client comes to you and you get in and you see it could be a number of different cleanup issues that are affecting prior years. They come to you and say, hey, I want to start with 2024 books or, current year books. And you get in and you see their 2023 is off. It looks like their 2022 is off because you can see all of these payments that haven't been cleared from like an undeposited fund standpoint. If they do not want to pay you to do that cleanup, I would recommend starting a new QuickBooks file. Even if they're wanting you to do 2023. And if they don't want you to go back and fix 2022 and it's off, I would recommend starting a new QuickBooks file, especially if they're cash basis. So it might get a little funky if they're accrual, because you'll just need more documentation. Really, either way, I would probably start a new QuickBooks file. Another thing I've seen with a client is I had a client come to me and they had a bunch of recurring invoices. So you can do recurring transactions, recurring expenses, recurring invoices, recurring bills, recurring bill payments, and you have to go to settings, recurring transactions, and you're going to see all of these transactions. Well, this client did recurring invoices, but you see those invoices were not the exact amounts. They had not been updated, and he had no documentation to help me sort through which of those invoices would have been paid, which ones would have not been paid. Some of them had been matched, like he had one of his admins get in there, and the cost to undo that was greater than made sense for him to pay. So we did start a new QuickBooks file, because he was then able to say, this would be a strong caveat to some of this too. He was able to say 100% of these deposits, all of my customer payments, I do not commingle. They're 100% always in the business account. I never deposit anything into my personal account. So with that piece of information, we were able to say confidently, without a doubt, that everything deposited into the bank account was income. He wasn't putting money in. He wasn't due froming his other companies. All the income into the account was sales. So when we started a new file, we knew all the deposits when we pulled in bank transactions were sales. So we were able to more easily clean up that year with expenses and income correctly. If that makes sense. Let me know if it doesn't. So undeposited mess, like undeposited mess. Freudian slip there. Undeposited funds, that can cause a reason to start over. Accounts receivable, so it's one and the same, but there could be multiple different reasons that accounts receivable or accounts payable causes a reason for to start over. Inventory can cause a reason to start over. And just knowing that the integrity of the file, that would be my last suggestion, is knowing that the client has had too many people in that don't know what they're doing. They've had an admin, they've had maybe another bookkeeper, they've had sketchy Joe neighbor do some stuff and she didn't know what she was doing. Yeah, I'm glad great rename on the spot. So I actually love undeposited funds, like cleanups. I love unsorting them, but I almost love it when I'm problem solving for you guys. Like no one likes these. No one likes these. So the client really needs to have documentation for those, because you have to go back. You really need to go payment by payment to fix undeposited funds. I think we see a common fix of like zero bank deposit, which could work. That works best when 100% of the payments go into the bank account. And there's not like due froms and things like that. So once you get to too many layers of, we don't have documentation for this and we don't have documentation for that, and we don't have documentation for what the client should have paid, we don't have any other supporting ledgers for this information, a new QuickBooks file might be warranted. Before I get on to the next point of like, okay, great, what do we do with the old file? How do we do this? All of those things. Megan, do you have any other scenarios that I didn't mention that you're like 100% that one
Um,
that you do?
one has been like when they do a conversion from desktop to online. Now it depends on who did the conversion, where the books kept up in desktop, all those things, because sometimes it pulls over, everything's smooth, everything's good. But more times than not, it creates more of a mess and a headache than what you had to start with. So a lot of times, like especially we're at the beginning of the year, if you're just going to do 2024's books, it's easier just to start a brand new QuickBooks online account instead of trying to transfer or convert desktop to online.
Absolutely. We just saw that. I forgot when I was doing my scenarios that came up
Yeah.
recently.
When you,
Okay,
excuse me,
was there? Yes,
when
ma'am.
you start an over again, do they have to purchase another QuickBooks account?
Yeah, that's a good question. So there might actually be an overlap in the need for a subscription. So they might have like if it takes you 2 months to to map everything, you might want it. There's a delay like when you cancel a subscription, like how long you have access to it. I think it's like 60 or 90 days. That they'll still have access to the old subscription and then you'll start a new subscription. So that was actually leading into my next point of so what do you do with the QuickBooks file? So they would cancel the subscription. You can back it up using a there's a web-based subscription called Rewind. Some bookkeepers use Rewind to just back up their books every month or every year so that if they hire a contractor or an employee to come in and work on the books, if the bookkeeper does something incorrectly or you yourself do something, you hit a button and it messes everything up or you delete something and you have that backup, you can put the backup back in place. Instead, it's a nice undo. But that would also be a solution if someone was wanting to keep the data in that QuickBooks file without losing it. So they would pay for a Rewind subscription. The other way to do it is to go to, so like if you navigate to the gear in the top right, so like where you see like your name and like a circle with a color, your initial. So there's a gear right there. So you can navigate there. And on the QuickBooks home screen, you can start like the backup wizard and it will start to back up and you can back it up to a thumb drive, like a USB thumb drive still. So it's been a while since I've used thumb drives, actually, now that everything is cloud-based. So we went from floppy disk. There was something before that too, but I started with floppy disk. And then I went to, again, did you use what was before that?
No, it was floppy disk for me too. I'm just
Okay, so
laughing.
you inserted it to the thing and don't take it out too early, right? So like you inserted that, or then you had CDs, you also had thumb drives. And so you would back up your computers. You also have the electronic USB hard drive backups. The perk of having Kyle is he backs up stuff and there's like a server now and above my head. Guys, wait, that's above my head. Okay, so you could back it up to a thumb drive is the option. And QuickBooks has a wizard on how to do that, which I grabbed for you guys. Look at this link. So if you're in Zoom, I am putting a rewind backup. So here's the backup to rewind. So nope, it did not paste the link. Let me try this again. There's the link. So if you're looking for rewind, there's the solution there. Okay, so then how to, let me know if I didn't answer something on backing up the files. That's what to do with the file. Another thing you could do is you could download all the general ledgers, the trial balance, the balance sheet, all of the list and stuff. They could just save that as their backup. When we start a new QuickBooks file, that's also what we're going to grab. So in QuickBooks, whether you're, so you can kind of do this if you're desktop or online, the same principles, nuances will be different, but the principles will apply. So if you're going to go start a new QuickBooks file and they really like their chart of accounts, you can export their chart of accounts and import it, okay, to the new file. You can do the same with customer list, product list, inventory list, vendor names. And I just put another link in the chat to it's a help article from QuickBooks on how to start over, what you might need to grab from the previous file, just so you have as a reference guide, because when you get in, it's like, what all do I need to grab? Then I download the trial balance for, this is for desktop or QuickBooks online. You can download the trial balance and you can use that to get opening balances. You can download the vendor balance, ending balance, so you can import the vendor ending balance or customer balance, so that you have those opening balances from QuickBooks without having to hit opening balance equity, because that trial balance is going to give you the retained earnings and the offset. So you're going to do a journal entry almost just like you export it. So you're going to hit checking, increase or decrease, savings, increase or decrease, accounts payable, increase, decrease, and you're going to just go all the way down. Granted, if they have accounts payable, that's why you're going to do the vendor balance, and you're going to grab that balance if it's correct. You're going to have the client confirm all of the correct balances. And then you would reconnect the bank. You would reconnect. You're going to call QuickBooks support to have them port over reconnect QuickBooks payments if they're collecting payments through QuickBooks payments. Instead of starting a new QuickBooks payments account, they can actually have QuickBooks move that payments file, that payments account to the new QuickBooks file. And they're going to do that by getting the old company name, by it's like Alt ? Or Control Alt ? When you call them. So they're going to get that customer ID. They're going to get the new one, and they'll just move it over that way. But that's a phone call to make. And that's true if they're on desktop using QuickBooks Payments or QuickBooks Online using QuickBooks Payments. They don't need to start a new QuickBooks Payments account. Okay. Any other questions with starting a new QuickBooks file or when to start over? Do you wish you had started over a QuickBooks file and instead you tried to do the cleanup and you're like, they did not pay me for this? When should you fight to keep the QuickBooks account? Would probably be another question. You should fight to keep it if they've really had good accounting up until one issue, and that issue is fixable. I would fight to fix it if it is fixable, and I would fight to have them pay to fix it. Meaning, like, the thing that got off is QuickBooks payment deposits, and you have the data to recreate, and it's 80 transactions. I would fight to fix that. Does that make sense? Like, we're gonna go through all of this work, because now you have to pay for a setup fee. Like, that's not free either. So they don't want to pay for the cleanup, but they are willing to pay for the setup fee. So 80 transactions might be cheaper to fix than the setup it would take. I have done a merge over from, what was the client using? I want to say the client was using QuickBooks Online. They wanted to switch to a new account. I pulled all of the general ledgers and I imported them for all eternity of their QuickBooks file, because it was correct. It was one of those instances where they were changing business types. I don't know. There was a reason the bookkeeping was fine, but they needed to start over in a new oh no, they were coming from another software. They were coming from like Appfolio to QuickBooks, and they just hired me to do the merge over. And for them, because they didn't want to pay a lot, all I did was I exported all the general ledger, all the list. I imported the list and I imported the general ledger using Sascient. If you have Right Tool, that works as well to do that. So I just exported it and literally imported it in. I mean, okay, it wasn't that simple. There were some file edits to make, but it was basically that simple. It took hours, not weeks or days. Map, just you had to map the file before you put it in, and that took a hot second because they had tens of thousands of lines to import. So, but we kept the integrity of their accounting in place by doing that. I don't see any other questions in the chat. I don't know if there's anything on Facebook.
Not that I see.
Okay, I'm gonna pause screen sharing. So if there's no more questions on when to start a new QuickBooks file or nothing that you guys want to add to that, and I don't see any questions from like that were submitted during the week. Sue says it's making me think of some of the stuff I need to fix after starting. Sue's, that might be. I have seen bookkeepers, and I think it's just a lack of knowing like that you can do some things, because I think sometimes you can start a new QuickBooks file, you don't bring in those beginning balances, and so you're like, I don't know what the bank balance is, right? So then you have to do the opening balance like to equity. You have to do an equity entry to get that opening balance in there. And instead you can actually get that trial balance. And this is also true from CPAs. Like if you're like, the books are really messed up, but they're working with a CPA, you can request the trial balance from the CPA to see if they have one. Yeah, so retained earnings is an equity account. So some people will do opening balance equity. Some people hit retained earnings. Others will hit like an accumulated adjustments account. So I was trying, all three of those are equity accounts, absolutely. So then to avoid doing that, you would get the trial balance and you would have those opening balances that you would need instead of going blind, for sure. Because there is no opening balance in accounting. Fun fact of the day. Megan's heard me say that so many times that I'm like, it's just, it doesn't exist. Yay, QuickBooks. But
yeah, I was about to say that, but you gotta love QuickBooks. Throw it in there.
Yeah, QuickBooks creates it based on the day that you connect it. But if we think about accounting, so just if you haven't heard this before, you're listening on a podcast or something, an opening balance in QuickBooks or in accounting, because we use a double entry accounting system, is always zero. Because when you start a bank account, the bank account is zero. So ideally, and this is why I'm kind of arguing about the integrity of an accounting file, if you start off correctly from the beginning and you add the bank account when it was actually used, or you zero it out, or like transition it, so you have personal, like you changed a business card from this other company, you shut it down, you redid the EIN, you said, hey, I still want to use this business credit card for this other entity, so you physically change the entity on it, it should be zeroed out, so that the balance should always be zero of any account coming in. What happens though is, the owner's like, oh, I forgot I had this card, I've been using it for 2 years, we've never added it to the books, we've just, I've just said, hey, we have about 20,000 on it, and then or you add this card mid-year and it's got a $20,000 balance or opening balance on it or something. Thanks, Suze. the problem with that is like, you don't know what that 20,000 makes up. Like, it should have an expense. It should have a contribution to it. It should have something more than equity to it. The assumption though is if you have an opening balance like that, that it's already in retained earnings because they would have previously been counting for it. So something happened, life happened, it's in retained earnings, and so you're going to, in essence, zero it out to retained earnings by entering that balance and making that journal entry. So retained earnings, equity, accumulated adjustments, stuff like that. Prior period or prior year adjustments. So absolutely. Yeah, he like ran away from dad thinking he's so cool, and I got to mom.
And then he got caught.
Then he got caught. He did that the other day. He came up to me and was doing something, and then he heard dad walking around the corner and went and hid behind me because he was disobeying dad, and I didn't realize it when I was like engaging him on whatever, and I was like, oh, clearly you were asked to do something you did not want to do. Anyway, I digress. Okay, so I didn't see any questions posted previously. Any other questions in the chat on Facebook?
No, I don't see anything else on Facebook.
Any other questions that you guys are encountering in your bookkeeping business that we can help troubleshoot, shine light on, things like that?
I have a client that she's new, but she didn't have QuickBooks, so I got her hooked up to the QuickBooks. But she's putting everything in. She's taken out, I guess what she says is not part of her business because she kind of commingled some. But when I gave her a quote, she wanted to know the scope of the quote and everything, and I explained that to her. The way she bills her clients is she gives them a list of what she's doing or what she has done, then she bills them. And then they pay her that way. Well, I'm saying that pay up front because I've already given her a lot of information as it is. But to come down is what she does is she goes into the QuickBooks. She takes it from the transactions into the registry. And she wants me just to run a report for her, but I have no information. I don't have any bank statements. She hasn't given me anything but access to her as an accountant to her QuickBooks. How do I handle that?
Here's how I would handle it. Megan, let me know if you would do it differently. I believe that I'm the service provider. Like, I'm the one saying, here's what I need. Here's what I need to do this. I also do not anymore. I did when I early on because I thought I was supposed to, I guess. I don't know why do we do some things. I no longer take on just project like add-on services. So I either do the full bookkeeping or I don't do the books. Like, I don't do anything for you. So I don't just run a report for you. I have to do the bookkeeping. So if that's the case, here's what I need to do the bookkeeping. Here's what I need to do onboarding. So like, it almost sounds like she's gotten to control the conversation, and it would be your turn now to say, okay, to move forward, here's my process. Here's what it looks like to sign the engagement letter. Then this is what my onboarding process looks like. And then this is what you can expect for service delivery. You mentioned that you need this custom report. I would do it based on this. And it sounds like based on this, and you would receive it, maybe she's wanting it once a week or once a month. And, based on your need for it on XYZ date, like, the first of the month or whatever, I would need everything by XYZ date to make that happen for you.
And this is the cleanup for 23. But I don't understand what she's, and I told her if she's doing what she's doing, she's pretty much doing the work that I would do. And
That's okay.
And that she, if she can do it she can continue to do it herself. I don't know if I was alone because she kind of, okay, but I told her she could probably just, maybe she needs to do it herself and then just
So,
go and reconcile the reports and draw her own conclusion.
okay, so in that case, so she's already done the transactions. You're just, I have a client who like systemically has me do that for him. I see him at the end of every year. He's like one of the first, he might be the first cleanup I ever got, like my third client with like, he just came to me for a cleanup, multi-year cleanup. The other two had cleanup, but it was a little different. So in that case, I would get everything I would normally get for bookkeeping,
Mhm.
and I would just review her transactions. I actually had another person come to me this year for the same thing. I get all the bank statements anyway. I review where everything's coded. I review the balances and I reconcile for them. And then I'm charging them because I might have to move stuff around. They
Mhm.
might have done a transfer and not matched it. So now I have to go and correct that entry on both sides. So I need all bank statements, and I'm going to treat it just like a cleanup. I might charge differently because I'm like doing the year end cleanup and review, and they've done the work to categorize. But you might still have to recategorize stuff, and you might still have to move stuff around. You might still have to touch transactions. So I
And that's
factor
what
that
I
into your
told her.
price, but the work is still the same.
Mhm. That's what I told her. But, and it's not, to me, it's not that much. It's like, she doesn't have a lot of transactions, but I just said I charged her $100 per month for the year, and she just is not. I'm thinking she doesn't want to pay.
I don't go less than 1200. So 1200 was about exactly what I was thinking that I would start.
Mhm.
And I don't go less than that typically.
Okay. I might not be working with this lady, so I don't know.
Megan, what do you think on rate? And because I mean, sometimes you could do it for like $600 and it takes you 3 hours to do.
Yeah, sometimes if I'm really unsure and I'm not like I'm unsure how long it's going to take me, it's like one-off stuff, I just charge them hourly and make them pay up front. And I mean, if you don't think it's going to take that long, I usually do 10 hours up front. But if you don't think it's going to take that long, you could do 5, you could do whatever. But and then usually at 10 hours, you kind of have a feel for it. How long is it going to take you to complete the project? Or like, I still have no idea. I need another 10 hours, whatever. But I kind of bill them like that, and I don't do the work until I get paid for the invoice. Um,
For the 10 hours.
Correct. Yeah. So yeah.
Mhm.
Yeah. So I'll make them pay for the 10 hours up front. Once I get close to that 10 hours, if I know how long it's going to take me to finish it up, I'll bill them the rest of the hours or charge them another 10 hours and keep going until till we get there. But I mean, if you don't, it's
She,
okay to say no too, like
I
don't feel
agree.
like you have to say yes either if you don't feel comfortable doing it.
No, it's just she hasn't sent me anything. So I can look on the transactions in QuickBooks, but she hasn't sent me any of her bank statements, and she was going to about what 3 months. She said she would send me 3 months of them first to look over, but she didn't know what included everything and why I was charging her that and what was the
That's just
everything.
to review. So you could just tell her, like, if she's asking for like, what does that include? On my engagement letter, I have like a description of the service. So it might be like to review transactions or correctly coded, to reconcile January, each month financials, to review reports and issue year-end financials. It might
And
just
I,
be those
and
3 bullet points.
And in my engagement letter, it tells that. But she doesn't, for some reason, she's saying the scope. She wants to know every detail before she even pays.
She might not be a good. She might not be a fit. If like if it's hard to communicate, like if you're feeling resistance from it, that could
Mhm.
be something you're giving off to her that she's resisting, or vice versa.
Mhm.
It might not be a good fit, and I think that's where our gut says maybe we're not a good fit to serve them, or it can really just be communication, and she's just looking to be like you don't like, I think sometimes we take on their money mindset issues or their like history of working with people before. Like she might have gotten burned. She might have sent her bookkeeping to someone and they messed it up, or they overcharged her, or she just somehow did not feel like that situation went well. And she's really skeptical of trying again. But the reality is she needs to try again because she doesn't know how to do it.
Okay, because
So
I've
it might just be giving her some grace and saying, hey, I understand engagement letters are a little confusing. Let's jump on a 15-minute call max. Don't let it go over 15.
mhm,
And just say, hey, I want to just summarize what this is. Here's what I'm going to do. Here's what it's going to look like. And then here's what my timeline should look like. That might change based on these factors.
okay.
Just giving her like a really clear.
Because she's in another state too, so we're working back and forth.
Some people are really skeptical of working with people online still. Like
Mhm,
we're getting, we're all kind of ahead of that curve, used to it, because either we started our businesses completely online, but there's some people that are still behind working online.
Because she always compares my other accountant did this, and I don't know if she gave them access to everything and they messed it up. I don't know, but she hasn't done anything for last year.
So my response to my other accountant did is typically like, well, based on the information I have, I can do this, or, here's our process. What is it that you're, and then I ask them, what are they missing? What do they feel like they're not getting? And it totally depends on the client and what they understand of accounting.
Yes.
And that could be different from I saw a comment come through yesterday in our coaches thread, like we all chat, and there was a discussion about a client or something going on. And as I read it, and the client was doing something very specifically, I'm like, oh, I wonder if this is a C-suite type executive who left corporate to start their own business, and they have enough knowledge of accounting to know kind of what should be done. So they get into QuickBooks and they're like, well, this should be done, but they don't know the software. So sometimes they will force try to do something that the software is already doing behind the scenes because they don't know. They just know their accountant said these words, and those words the accountant made important. And so they're trying to compensate because they know enough to be dangerous, not necessarily helpful.
And I think that's kind of like her. She really doesn't know a lot about the bookkeeping process because she always just turned it over. So I know she's very busy and back and forth. I don't hear from her, for days sometimes. But okay, I'll work with her and see I'll let you all know how that turned out. Yeah. And when it goes to the QuickBooks and restarting over, if a client has QuickBooks and their account was sabotaged and and they had to close that account down and start a new one, a new account, banking account. Can you use the same QuickBooks account, but you just have to readjust everything a little bit?
So like they had fraud happen on their account?
Yes.
Yeah, so you just you record the fraudulent charges often as an expense, depending on if they got reimbursed for it or how that happened. And then did they get a new card or a whole new bank account?
They got a whole new bank account, and that bank account has reverse charges.
Okay, yeah. So you can start a new. So like what I did last time, Megan, let me know if you did something different because I think so you have that account, you have those charges. I kind of did an entry between the two, but I went ahead and put the new bank account as like a new bank account, and then the charges offset each other. Like I zeroed them out. Like,
oh, okay.
You record the charges like to each other, kind of like you would a transfer without transferring. You're going to record an expense and a deposit and zero them out. something like that. You could do a journal entry.
Okay,
depending on how
that's
you
what I was
want to
wondering.
do it.
Okay, journal entry. Okay.
Yeah.
You journal entry, all of them? It's a lot.
All of the ones that wait, journal entry, all of what? The fraudulent charges?
Yeah, the fraudulent and reversing it back into the new account.
How many are there?
It's 7.
There's 7?
Yes.
Okay, that's
7.
not a lot. That,
Oh,
yeah, you're fine.
there's 7 $1,000 entries in the same day.
Yeah.
Someone in his business wrote checks on him,
Yeah.
and they were
So
really smart. They put their own name at the bottom.
that's unfortunate. I have seen fraud happen in the worst, weirdest occasions. And when I was an auditor, there was a son who stole money from his dad's business. Like, it was a big deal. And if you have yearly audits, it's a really big deal to have fraud happen, especially on staff like that.
Mm.
And it's really sad. It's really sad to have an employee do that to you. But yeah, so the transactions should just offset each other. And there's multiple ways to go about doing that for sure. If you get stuck, let us know. Megan or I or one of the coaches could jump on with you and take a look at it.
I will.
Yeah. But absolutely, I just started a new account because it is a new account. So, but you can also kind of do like a clearing, like all of these go to fraud expense, all of these go to pay off the fraud expense.
Mhm.
That would be a simple way to do it too.
Okay, and they closed down the other account, so I can't do anything with that. But it's difficult. This is one of these court cases. Okay, thank you.
Yeah, so the ending balance of that other account, that first account, should be
Mhm.
0. So, what do you need to do to get it to 0?
Mhm.
The bank should be able to issue, if they didn't get one, like the final statement.
Okay,
If you don't see that.
okay.
But I did have one that was a little funky, like the way that they did the reversals on the 2 accounts. Like, I remember it being a little funky. Like, it wasn't as straightforward as close a new account or close an account, start a new account. It's the way that they intermingled the 2 accounts is a little funky. For sure.
Okay. Thank you, ladies.
Yeah. Okay. Megan, I don't see any questions on my side. Do you see any?
Nope.
I hope you guys have a good weekend. We'll see you guys next week. If you do have questions and are hoping to catch the replay, feel free to post those questions. We love seeing your faces though, so feel free to show up and ask questions.
Have a good week, ladies.
Okay. Bye, guys.
Bye.